Ladies and gentlemen, good day and welcome to the Kaya Limited Q2 FY24 earnings conference call hosted by Dolat Capital. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on a touch-tone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Sachin Bobade from Dolat Capital. Thank you, and over to you, sir.
Thank you, Zico. On behalf of Dolat Capital, I welcome you all to the Q2 FY24 earnings conference call of Kaya Limited. Hope you all and your family members are staying safe and healthy. From the management side, we have with us Mr. Rajiv Suri, Global Chief Executive Officer and Managing Director, Kaya Middle East, Mr. Rajiv Nair, Chief Executive Officer, Kaya India, and Mr. Saurabh Shah, Chief Financial Officer. Now I hand the floor to Mr. Rajiv Suri for his opening remark, and then we would have a question and answer session. Over to you, sir.
Thank you. Good morning, everybody. I would like to welcome you to the conference call on company's behalf. The investor presentation has been updated on our website, kaya.in, and contains the financials, key metrics, and business updates. I hope you have had a chance to go through it. Let me begin the conference with highlights for Q2 performance. I will start with Kaya India performance, and then I will cover Middle East. Q2 clinics performance in India was strong at 20% growth versus Q2 last year, driven by new growth levers which contributed to 63% of this growth. These growth levers include body category, nutraceuticals, innovation, omni-channel, as well as new clinics. The net revenue in clinics grew by 21% versus Q2 last year, with increase in productivity indicating both the brand refresh and pricing strategies are working for the company. The product business grew by 34%, driven by categories like skin and nutraceuticals. The renewed focus on hair care category resulted in an increase of 24% growth over Q2 last year. The company continued to delight the customers with high NPS score of 84 and retained a laser-sharp focus on customer experience. Our growth levers updates are as follows. Marketing automation. We have commissioned a marketing automation project to digitize our customer engagement and new customer acquisition, which includes setting up of automated appointment bookings, customized nudges through WhatsApp and webbots. On new services, the company new body segment vertical had a 4x growth over Q2 FY23. Nutraceuticals contributed to 21% of Q2 FY24 product business. As part of our brand refresh project, the company during the quarter relocated one clinic, making it 3 clinics for the year, and renovated 5 clinics, making it 11 clinics for the year. And we have invested in 13 machines and technology for the clinics for this quarter, making it 63 machines for the year. On the people front, we attained notable success by clinching 2 esteemed awards, the Thrive Award from the International Business Consortium for Best Employee Engagement, and the award for 100 Best Companies for Women in India by Avtar and Seramount. Now going on to the Middle East business, on a Q2 basis, the collections were 54 crores and showed an uptick at 4% versus Q2 last year, and showed an improvement from decline of -3% in Q1 this year. Within the Middle East, The UAE performance was stronger, achieving a growth of 16% versus quarter 2 last year. Net revenue performance grew by 5% over quarter 2 last year. Product revenue grew by plus 19% versus quarter 2 last year, and the renewed focus on hair care category for this quarter resulted in 33% growth. On the financial performance, Kaya Limited posted consolidated revenue from operations of INR 100.6 crores for quarter 2, a growth of 10% over corresponding quarter. Consolidated EBITDA for quarter 2 is 10.2 crores as compared to INR 5.1 crores in quarter 2 FY23. Consolidated loss after tax and after exceptional items for quarter 2 is INR 13.4 crores as compared to a loss of 14.9 crores last year. The detailed financial information update is already with you in the uploaded investor presentation, and you may refer to that for additional information. I now open the session for questions, and my colleagues and I will be happy to answer them. Thank you.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on the touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. Thank you. Our first question is from the line of Dr. Vijay Kumar, who is an investor. Please go ahead.
Hi. Good morning, everyone. I've been a very old, investor in this company for a very long time and been watching it quite closely. I'm a doctor myself, so I have some inputs and few questions. So the first one is, we are a healthcare unit, right? Kaya is a clinic, healthcare unit, right? Recently, I have actually sent a patient. Am I audible?
You are audible.
Yes. Yeah. I have sent a patient to one of the clinics in Hyderabad, and patient had a problem with of pimples. It's a clinical problem, right? It's a health problem, And our people gave a treatment and all that, and then of no use, a patient came back to me, and then so I had to then very dissatisfied, and then I had to send the patient to some of the leading dermatologists outside. And when after 10 days, the patient came back to me, and then with some health reports and lab investigation. So what happened was, I'll come to the point now. Our competitor examined the patient, got to the root of it by prescribing few tests, like basic tests like hormonal and fasting glucose, insulin, and because insulin is one very big factor where pimples can appear. So she was very scientific, and then started treating there, and then within a month the patient improved, and patient was very happy. So 2-3 things happened for us. One is we were not scientific. We were like a beauty clinic, beauty shop. So that is one. Number 2, what happened was we have created an unsatisfied patient who will never step into our clinics. And number 3, we have lost an upside opportunity of top line and a very good bottom line. So I think we need to approach it more clinically than just as a beauty shop. So that's my comment. And I will stop now. I think I would want to hear from you, if you can, please take it in a very positive, I'm an investor and I would love Kaya to do very well, and I know Raju also, he's a very good, guy, and I mean, I love the promoters, Mariwal, I'm a shareholder in Marico also, so full marks to everybody, and I also welcome Raju Suri into the management team. Please take it positively,
Yeah.
Please go ahead.
Thank you so much, Dr. Vijay. So I think a very, very, very valid feedback, and I think we take it absolutely, in the right spirit. What's important, what you mentioned, I think is already something that has come to our discussions in various types of treatments that we actually do. And, very similar to your feedback, we are actually incorporating some of this into our own standard operating processes inside the business. We've recently commenced some changes in our SOP, especially for our hair care segment in Kaya, where, we are actually starting a lot of diagnostics for customers before we get into the treatment of the customer. So we have actually incorporated diagnostic, we have incorporated prescription drug as well as nutrition consulting for customers alongside the treatment that we actually offer. And slowly this will actually get into other segments as well. While of course I want to give a caveat here that we will not become a clinical dermatology clinic. So it will be an aesthetic dermatology clinic, but with some sound interventions before we get into treatment mode. So that's a very, very good feedback. The other thing that we have done is we actually gone back to roots, and we have gotten a very senior head of medical in the business, a person called Dr. Aparna Santhanam. And she actually was one of the founding members of Kaya at the time when we launched in 2003. She is also reworking and working with the doctors more closely to look at outcome-driven performance. So outcome actually needs good input, and some of the inputs that you mentioned, I think, is what we are taking. So those are the measures that we are actually taking for addressing the problems that you mentioned. So thank you for that feedback, Dr. Vijay.
Yeah, excellent. I'm glad you're doing that, because that will, add, a lot of value, both on the members and, your work down there, And on the positive side, I've also visited, a couple of units here, very courteous, very good, it's a welcoming, so congrats on that. And I'm also seeing good improvement in overall, financials too as we, move on. It was a very painful holding the stock for a very long time. It was a very big underperformer, for all of us. But I think this is the tough business. I fully agree. I'm a CEO of one of the healthcare chain, and I would like to even meet you personally whenever you guys come to Hyderabad. It would be great if we can catch up and then maybe discuss, and then it will help the organization, because that is one. Number two, now that you are also looking at coming for a rights issue, and you also have around 95 units overall. That means 95 touch points that you have. Are you also looking at further expansion? Obviously, with the rise of funds, I think you are. And number two, are you also looking at adjacencies? Something like laboratory sample, collection points, something like that. Can you look at those areas? I'm just giving an example, but it could be anything. Because you have 9,500 touch points, and which are going to grow as we go ahead.
Correct. So, Dr. Vijay, 2 points that you mentioned. One was on expansion. Yes, there has been some expansion into tier 2 cities. We are largely looking at cities where we are already present, but the presence is maybe one odd clinic. So we have entered into Lucknow and Surat as 2 cities where we have a single unit, which we are now added another unit. We also gone into virgin territories like Siliguri. And also peripheral new segments like Electronic City, Bangalore. So about 4 clinics have been opened over the last 6 months. In fact, more than 6 months. One of the clinics in Lucknow is almost a year now. We are opportunistically looking for expansion in clusters in tier 2 cities because I think the profitability mix of these clinics are much better than that of expensive real estate in some of the bigger cities. So yes, expansion is something that we are doing. Secondly, as I mentioned to you, in segments like hair care and others where there is diagnostic requirements, we are actually doing a collaboration and a tie-up, and not really getting into it in our own way. So we will not be setting up any peripheral businesses at the moment on that, but we will take help from what is available in the market as we go forward.
Right. I have a couple of more questions. I can come back into the queue or go back to the queue, or if it's possible, I can go ahead and then ask. Is that fine?
Could you go back to the queue because there are a few other questions. People, we are happy to take your questions immediately after that. Yeah. Thank you so much.
Thank you.
Thank you. Our next question is from the line of Harsh Patel from Alpha Alternatives. Please go ahead.
Hello. Hello.
Yes, please go ahead with your question.
Hi, good morning. Okay, I just wanted a comment on the asset utilization. See, currently, right now, we have some 35,000 unique clients. Now, can this number go to 50,000 easily, or we will need new clinics? How does that work?
The overall database of consumers who are actually consuming services is over a lakh of customers. And probably what you are actually referring to is the number of bills that are actually done over a period of time. So where did you get this number of 35,000?
I guess there's a number of clients which are...
So it's a unique customer count you are referring.
Okay, so the total is more than that.
Yeah, so what you're looking at is basically a quarter number, but if you look at a yearly number, it is a 1 lakh term. It's 1 lakh unique customer. Yeah.
Okay, got it. So how can the number increase? What is the capacity that ultimately will get increased to?
So currently, the utilization of the clinic is in the range of about 55%. And definitely there are clinics out there which have reached more than 65-70% as well. So definitely our endeavor is to increase the volume of consumption that we do in the clinics. Just to give you an estimation of what's happened between last year, same quarter and this quarter, is something like 47,000 live sessions. We have now reached 52,000 live sessions in the same number of clinics that we have. And every quarter we are trying to drive up the volume of consumption inside the clinics, and that will increase the capacity utilization.
Got it. So, okay. And what is the highest number?
67, highest in a clinic.
70. Yeah.
So close to about 70% would be on the higher range.
And again, from 70%, there can be improvement to 90 or 95.
It depends. Yeah.
So, it depends on your machine utilization. It depends upon the hours of the you deploy on the service. If we have invested in some machines which can complete the task in the lower number of hours, the lead time reduces and that's the capacity percentage changes. So our intention is to increase the session, which is, with the lower lead time. So that's what we are emphasizing. So if you look at, we have invested in some machines in past 1 year and we look forward with that strategy.
Got it. And my next question is regarding the Middle East business. Now, when you compare your standalone to your Middle East, the number, if you compare the number, your EBITDA positive in India, but that's not showing in the Middle East. So, what is not playing out in the Middle East? Is it because of competition? Is it?
In the Middle East, we are operating in 3 countries. Okay. The business in UAE is still going quite strong, and also specifically in Dubai, the clinic EBITDA is in the region of 30%. It puts it in a strong position. We are below expectations in Oman, where we need to build some of the business, and Saudi Arabia. And as I mentioned earlier, the UAE business continues to show traction.
Got it. So, but is it largely because of competition or what is it?
It's a combination of competition as well as we are still haven't started the clinic rollout in in Middle East because we said we will trial it in India and see how that expansion plan works here. Open 4 clinics and maybe open a few more. And then once we have the formula right, then we will start to roll out in Middle East, and that should make a difference.
And lastly, on the rights issue proceeds, when will the money come in and how are you going to utilize the money?
So, for that aspect, the question I currently would not be able to give any insight because we are working on it. And moment we are ready, when we file with the authority, it would be in public domain.
But how much time this should take?
Currently, I cannot comment, but the rights issue committee will be formed. It's already in place, so we'll put forward to that information, and then later on I can get back to you.
Okay. Thank you.
Thank you. Our next question is from the line of Ajay Vora from Nuvama. Please go ahead.
Yeah, hi sir. Congratulations on a good set of numbers and thanks for the opportunity. So I understand that not much details can be shared, but broadly, what I just want to know is from the rights issue, the fundraising. I'm assuming that large part would go towards debt reduction, but in terms of the balance money, what could be the sense in terms of the capital which will be spent in India and overseas?
So I think I already informed that will intimate you, but currently I would not be fair because I need to submit to the regulatory authority, get approval, and then I can come forward. To when I'm making application, it would be in public domain, so it would be not correct or fair from my side to comment anything.
And okay, fine. And in terms of the impairment which we have been taking, do you think that the large part of that is behind us now after current quarter?
So, if you ask me, it's based on the performance of the subsidiaries, and we'll once again review as and when the business performance, if it improves and, its probability, the chances are less. So we'll wait and watch maybe quarter and quarter, and maybe we'll come at a place where, it gets streamlined.
But do you think that, from the current trajectory and also from the current month, the festive season has started, all our clinics are seeing good signs of growth. They have already started, post the refurnishing and everything what we have done. Do you think that the traction has picked up from the current month as well?
Yeah, I think if you look at the last quarter numbers only, because I won't want to comment on what happens this quarter, I think we've seen progressive improvements across the quarter, and I think we are in line and in some cases higher than what's happening in the market in terms of growth. But then, of course, we have to wait and watch how the festive season pans out for this, because next month is Diwali, so we'll actually get to know from there. But based on the last quarter's performance, the 20% growth in the India market is something that I think is in line with what we had expected.
Sure. And lastly, in the current quarter's revenue, what would be the contribution from products?
Just 1 second, please.
Yeah.
Yeah, it's about 13% total mix of product in the overall mix. This I'm talking about the clinic business, 13%.
No, and overall, meaning in terms of what we sell on platforms as well?
It'll be in the range of about 20%.
20%.
18 to 20%.
Yeah.
Okay. So directionally,
Sorry, Mr. Vora, may we request you to return to the question queue for follow-up questions, as there are several participants waiting for their turn, sir. Thank you. Our next question is from the line of Yash Bajaj from Lucky Investments. Please go ahead.
Hello, good morning, team. Thanks for the opportunity. Am I audible?
Yes,
Yes.
Yeah. So I'm into this company. Can you just give me a brief idea from a customer journey point of view? That's my first question.
So can you repeat? I think your voice got break, please.
I'm asking what is the customer journey like in our business model right from when the customer very till the treatment is
Sorry
done?
to interrupt, Mr. Bajaj. So your audio is breaking, sir. If you could please use your handset. Mr. Bajaj, can you hear us? Hello? Mr. Bajaj, we are unable to hear you. May we request that you return to the question queue, please? As your audio is not clear, sir. Thank you. Our next question is from the line of Bhaskar Chaudhary from Entrust Family Office. Please go ahead.
Yeah, hi. A few questions. One, can you give a sense of how your centers or clinics are growing, especially the ones that have been operational for a couple of years? So, how has the growth been in the first half? Secondly, can you also give us a sense of the center level profitability for these centers that have been in operation? And typically, what is the time for a center to achieve profitability in your model? You mentioned new centers in tier 2 towns like Lucknow and Siliguri, and that the real estate cost is lower. So if you could just give a sense on that. And thirdly, a few participants asked that question. Obviously, you may not be able to disclose the timing of the rights issue, but it may be helpful to understand the utilization of funds, because it's a substantial amount, 300 crores, if you look at your current market cap. So those are the three questions I have. Thanks.
So thanks for the question. I'll answer one by one. Basically, the point with regard to the lead time where the clinics makes a break even or profit, the lead time varies actually. It's between 12 months to 8 months, depend upon the vicinity of the locality. And if we get a good attraction, the numbers stack up better. So if you look at the last 4 clinics which we opened, on the blended version we are EBITDA positive. So that's one aspect. Second aspect on you needed some insight on the clinic unit economics to great extent. Sorry.
Yes, that will be correct. Yeah, unit economics and also the growth for clinics that have been open for more than a year.
No. So the clinics that we have opened recently are just about a year old. So obviously it will show some supernormal growth, and some of them are not even completed a year. I think it will be premature for us to give you numbers on growth at the moment.
The question was for clinics that have been open for some time, not the recently open.
So that's as an overall whole, if I have to look at the clinics which are excluding the new clinics, we are in the range of about 18% growth right now for clinics which are more than 2 years plus in terms of growth across the country.
So I'll give you on unit economics prospects. There's a consumable cost which comes into picture, which is around 20%. And the clinic operating cost is around 52%, which includes employee costs and rent, and there are clinic operating costs, and there's a consumer finance cost. So if you look at from H1 perspective for overall blended version of the scenario, the clinic EBITDA is 27%, and there are corporate overheads and ASP that stack up to around 25%. So that's how the overall unit economics work for the clinic. This is for the India operation.
Sure. Okay. And you mentioned 18% growth in approximately 18% growth in clinics that have been open for a while. Okay. So, but that seems to be in line with what your net revenue growth is. So for the newer clinics, you said the growth will be supernormal. So somehow the math doesn't seem to add up. But anyway, we'll take it offline. And on the question on the utilization of the rights issue fund, what is the broad plan?
I currently can't comment. Sorry, I would like to, but currently I've been cautious that let me complete the submission part, then I can come back. I understand your concern, but we are working on it.
Thank you.
Thank you. Before we take the next question, a reminder to all participants, you may press star and 1 to ask a question. Our next question is from the line of Aditya Sen from Robo Capital. Please go ahead.
Hi, thank you for the opportunity and good morning. Can you please share the growth trajectory of clinics going forward? At what rate are we planning to add each year?
We don't want to give a forward-looking statement, but I think definitely as part of the strategy that we worked on, we are looking at getting into more of the tier 2 cities. At the same time, peripheral regions within existing markets that we have. I give you 2 examples here. We opened up clinics in cities like Surat and Lucknow, which are tier 2 cities. At the same time, we also opened up in the peripheral region of Bangalore, which is electronic city. So we are opportunistically looking at places where we think there is high potential and the rental costs at the moment are under control. And of course, there is a promise of business in those markets. I think that's what we are trying to look at as part of this. And so as and how we are able to see opportunities for expansion, we will do that.
All right. And continuing with the previous participant's unit economics question, can you please share the capex per clinic?
So it's around 1.5 CR per clinic, includes machines and leasehold.
All right. Thank you.
Thanks.
Thank you. Our next question is from the line of Yash Bajaj from Lucky Investments. Please go ahead, sir.
Hello. I'm sorry for the previous disturbance. Am I audible now?
Yes, sir. Please go
Yeah, you're audible.
Okay, thank you. I'm fairly new to this company, so I just wanted to understand the business model in terms of from a customer's journey, when he enters and how long the treatment goes for on an average. From that point of view would be great.
So just to explain, our business is a combination of products and services. Largely, the clinics have been created for providing services, while there are complementary products that we also sell in the clinics. So I'll just currently stick in terms of this customer journey question with respect to the clinics. So the business that we are in is aesthetic dermatology. So there are various verticals under which we operate. Say, for example, laser hair removal, acne scar, anti-aging, hair care, and so on and so forth. How we attract these clients who are coming into the business is through the digital route. So we do performance marketing, we do content and social media marketing, which actually gets us customers via multiple routes. One important route is we have a call center which actually engages with customers who have shown interest. At the same time, there are customers who will read about us and directly, come into the business. And the third part is referral customers from existing customers. So that is the 3 routes from which customers actually come into our business. Once they come to the clinic, we don't directly start recommending services. It is done through what we call as scriptions, where the customer actually comes and meets a doctor. Doctor goes through a complete consultation on the concern of the customer, at the same time may recommend certain services that the customer actually needs. Peripheral prescription of drugs or some type of tests and others may also be prescribed to the customer. Now, the time duration of services will vary depending on the type of services that the customer takes. The duration can be as low as 2 or 3 months within which the customer can complete the package, or can go as long as 18 months. I'll give you an example of a short duration service. Some of the injectable anti-aging services may take 2 or 3 months time to consume a service, but in the case of a laser hair removal, it might take close to 18 months for the customer to complete the entire journey of services. Now, customer comes multiple times to consume these services, and while they are coming in, there could be further upselling that can happen on certain other services that they can do. For example, a customer who's doing a laser hair service can also take up facials while she's doing these services as she goes. I think that's broadly the customer journey that we actually follow today.
Got it. And so we have, Kaya is a fairly known brand and it has a very strong brand recognition. But it doesn't, the numbers haven't played out the way it should have. So what were the challenges previously, and what have we done in terms of changing or mitigating those challenges?
No, I think the challenge in the business is to attract new consumers all the time. because this is a aesthetic dermatology, it's a bit of a discretionary spending category. So like any other category which has discretionary spending, you need to always go out in the market and attract more and more clients every year into the business. If you look at it, Kaya, as you said, is a trusted brand. It's probably got the widest reach. It's also got the widest amount of doctors who are doing, and I would say qualified dermatologists in the business. It also has the largest investment on technology. So I think from fundamental perspective, we have everything right. It's just a matter that every year you need to get fresh clients also, because about 40% of our business comes from new customer count, client utilization in the business. So that's yeah. So and we are doing various other things. Just as a follow-up to that is investments in technology, marketing automation to be able to get to these customers via non-traditional channels. So I think that's probably the big challenge, I would say, in terms of business.
Got it. And is there any global...
Mr. Bajaj, may we request you to rejoin the question queue? As there are several participants waiting for their turn. Thank you. Our next question is from the line of Anupama Prakash Putra from Aryan Capital. Please go ahead.
Yeah, thanks for taking my question. I just wanted to understand what percentage of revenues is contributed to repeat customers. And the other thing is, what are the strategies to pull back the same customer and that they stay, those customers stay with the company? So, yeah, these are my questions.
Repeat customers or existing customers contribute to roughly about 60% of our total revenue. And largely these customers are either customers who've been staying with us for a long period of time or customers who have joined us before this financial year. The way we actually tackle this customer is through the CRM method. We have a CRM system which we actually run. We do some cohort targeting. We do some specific communication to these customers or offers and promotions that we run, or any new events that actually happen in the business. Say for example, we launched a new clinic, new location, we may invite existing customers to visit those locations, or new technology introduced, we may invite them to utilize those technologies. Sometimes there are top tier customers where we may do on invitation basis information about new services, some benefits for the new services for these customers as well. Earlier, all this communication used to happen through WhatsApp and emails only. Very recently, all of the communication that we do for top tier customers is happening through WhatsApp integration as well. So a lot of this communication today is available to customers through WhatsApp for business.
Okay, thank you. And one more question, if I can squeeze in. Any specific geography that the company is really doing well?
I think if you look at the business, there has been growth across regions. The north, so we have east and north as markets where we have seen good growth. At the same time, south also for the last 6 months has been very good. I think between the markets, if you were to compare, I think east, south and north are our strongest markets at the moment.
Okay, that's it. Thank you so much.
Thank you. Our next question is from the line of Aditya Sen from Robo Capital. Please go ahead. Mr. Aditya Sen, your line has been unmuted. Please go ahead with your question, sir. Sorry to interrupt, Mr. Aditya Sen. We are unable to hear you, sir. If you could please use your handset.
Am I audible now?
Yes, sir. Please go ahead.
Okay. So my question is on EBITDA. This quarter it was 12%. So going forward, is it going to sustain in the same range?
So, currently we cannot give a further future guidance perspective, but we'd like to have such sustainable EBITDA numbers so that we can, drive profitability.
Okay, that was my question. Thank you.
Thank you. Our next question is from the line of Yash Bajaj from Lucky Investments. Please go ahead.
Hi, thanks for the follow-up. Just two questions. One was on the previous point on business model. Is there any global scalable model similar to Kaya?
Yeah, if you compare, I think India is still, nascent in this area. The utilization of these services are very large. Even in our Middle East market, we can see that these services are extremely well entrenched. They may not be necessarily single clinic chains which have very large number of establishments. But then there are some large groups that are working in this area in many markets. If you see the US market, the Middle East market, or South American market and stuff like that. But we don't specifically follow a particular model because I think we have created a model for ourselves for India as well as Middle East. So it's not based on any international model that we are kind of chasing.
Okay. And just a clarification on the unit economics side. So 20% was consumable cost, clinic operating cost was 52%, and then comes corporate overhead and advertisement. The corporate overhead and advertisement is how much of sales did you say? 25%?
Yeah, 25%.
So on a...
I'm talking about the corporate EBITDA, but if you look at clinic EBITDA, it's around 27%.
Okay, so on a corporate level, it's 2%, right?
This is the expense.
Okay. Thank you so much.
Thank you. Before we take the next question, a reminder to all participants, you may press star and 1 to ask a question. Our next question is from the line of Dr. Vijay Kumar, who is an investor. Please go ahead.
Hi, thank you. My question is on the products, because I think 18-20% product revenue, I think I feel it's low, but what is your aspiration, say the medium to long term, next say 5 to 10 years, where would we like to be on the product, what would be the percentage of total revenue that we would gain from products?
Dr. Vijay, I can't give you a forward-looking number, but what we are doing proactively right now is to expand into segments that we are not present. For example, we are strengthening our range of hair care, which we believe is a very large potential both for services as well as for products. So recently there have been a few SKUs which are mentioned in the investor presentation. So I think hair care is one area that we are expanding. Nutraceuticals, we are actually working currently with collaborations, but at the same time we are also exploring our own range of nutraceuticals. I think these have contributed quite well over the last 1 year in the business, and these will be 2 areas of expansion that will be there. And the third important thing, if you may have noticed, is that our D2C business is now starting to be more visible. We have a very strong website that we have created on a very sound platform called Magento, and we are promoting that. And now what we have done in the last 6 months is to connect the D2C website to all our individual clinics. So customers can actually get supplies within 1 day of every product that they have actually serviced, because the servicing is largely become from individual clinics as well. So we will be promoting our D2C business quite strongly.
Okay. Now that we have D2C engine on, are you looking at also selling other products, other companies' products, especially the international products? Is there a chance where we can actually look at piggybacking on those?
Yeah, it's a good thought. While this, as a long-term strategy, I cannot tell you. In a more opportunistic way, we are selling some nutraceuticals of collaborative brands on our website. So that's already started, but I can't give you a forward-looking statement on this.
Okay. And on the product side, do you have any international global ambition?
Currently we have our international geography in which we are supplying products from India as well. So currently our global product strategy is largely exports to our Middle East operations.
Okay. Thank you very much. All the very best.
Thank you so much, Dr. Vijay.
Thank you. A reminder to all participants, ladies and gentlemen, you may press star and 1 to ask a question. Ladies and gentlemen, that was the last question of our question and answer session. As there are no further questions, I would now like to hand the conference over to the management for closing comments.
Thank you for participating, and we appreciate the time you took to attend our investor call.
Thank you so much.
Thank you. On behalf of Dolat Capital, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.